Today, I want to showcase two fundamental on-chain metrics that give insight into Bitcoin market cycles through the lens of unrealized profit and cost basis. So unrealized profit tells us how much capital gain exists across Bitcoin holders at current prices. Cost basis distribution, on the other hand, shows us where different cohorts of investors acquired their positions, right? So historically, Bitcoin has followed cyclical patterns with these three distinct phases. So we go through a recovery phase from bear market lows, excitement as new highs are reached, and euphoria when psychological extremes are developing in the price. So first off, before I get into it, I want to say thanks to everyone for watching the videos. I've been programming this website for well over a year now, and I'm pretty excited that I get to share all these metrics. I'm of the opinion that this information should be available to everyone, and I'm in the process of adding even more on-chain metrics, as well as for Ethereum and altcoin specific metrics to the website. So check it out if you have some time. So before we get into the first chart, the MVRV ratio, this is a very interesting chart to look at. So the bull market correction drawdowns chart. This chart tells an interesting story throughout the various cycles that we've had for Bitcoin so far. And in this chart, I'm basically indexing each market cycle from low to peak, and within those timeframes, I'm equating the percentage drawdown from the all-time high at that point, right? So using this, you can see periods of pullbacks throughout the cycles. Back in 2015 and 2017, or to 2017, Bitcoin would basically drop 35% pretty much on a regular basis during the bear market. You'd go to sleep, wake up, and Bitcoin was down, right? So then it would rocket to new highs within days or weeks. This cycle, we've only had two major corrections / periods that resulted in around a negative 25%. One was negative 28 corrections. So this is because Bitcoin's market cap is literally 100 times bigger now than it was then. So the corrections are actually shallower, but they take way longer compared to 2017, for example. Instead of sharp weekend crashes, you get these slow grinding 6-month corrections that pretty much are testing everyone's patience. So what this tells me is that the market structure has somewhat changed. Like there's more stable money and of course more institutional involvement. So you may have heard of something called the MVRV ratio. This ratio compares Bitcoin's current market value to its realized value, which is calculated by valuing each UTXO at the price when it was moved on chain last. So this gives us an aggregate profit or loss across Bitcoin holders based on their actual acquisition costs when that Bitcoin first entered their wallet. Fun fact, right now there's actually about $1.4 trillion worth of unrealized profit across all Bitcoin holders. Now I know that sounds like a crazy number and it's not necessarily a bad thing, but when this gets to really overheated levels, people start taking profits. It's normal to see your portfolio up an extreme amount, like 4x, 3x, even 10x during this 2011 phase, and to say, okay, I'm gonna start taking some chips off the table. It's simple human psychology, really. You, on the other hand, might say, okay, well, I'm not selling. Everyone I know is not selling, but there are people who start to move coins to exchanges, transfer between wallets, and we can see this directly on chain. Now that doesn't necessarily mean they're selling, but when coins move in and out of exchanges in large amounts and in large volumes, it historically shows that these coins were transferring and are transferring hands at higher prices or lower prices too when weak hands are capitulating. So when we see this MVRV ratio get really overheated, it shows you when these aggregate profits or losses really start to get out of hand. When we apply a standard deviation to the entire data set of the MVRV, we see statistically when things are getting overheated or oversold. Currently, we've held resistance off of the 1+ all-time cumulative standard deviation, this red line here. Conversely, we've also held support off of the all-time cumulative standard deviation. So this is the average of the data set, the middle, the gray line here. We also see that whenever we reach below -1 standard deviation, this can typically mark good accumulation territories and potential market cycle bottoms. As an important note, you might notice that this metric has experienced lower peaks from cycle to cycle. This is due to obviously diminishing returns. You can also note that a slight drift upwards is in the lows as well. This is because of decreased losses. So another important note, instead of using lines or fixed lines that MVRV equals 1 or equals 2, statistical bands, these cumulative statistical bands, they basically show us dynamic levels that are adapting to the actual profit and loss, the MVRV. And this is showing you sort of accounting for these diminishing returns and losses. And so this is the MVRV ratio. It's a very interesting chart to look at. So the next chart I want to look at is the short-term holder cost basis. And let me just turn off these. So this tracks the average price paid by people who bought Bitcoin in the last 155 days, so short-term holders. This metric is really important in my opinion because short-term holders are the most emotional participants in the market. They're quick to buy tops and sell bottoms, and understanding this behavior of short-term holders gives us insight into how they're thinking in market psychology and game theory, right? So you can see that during bull markets, let me just turn off my tooltip real quick. You can see that during bull markets, this can typically stay above or rarely deviate below this level. But during bear markets, this acts as a sort of resistance line. So during bear markets, people are thinking, short-term holders specifically, they're thinking, I'm already down so much, I'll take what I can get. And the opposite is true for bull markets. Right now, the short-term holder cost basis is sitting at around $111.3 thousand. And this means the average person who bought Bitcoin in the last 5 months paid about $111K for it. Here's what is particularly remarkable about this cycle. And I'm not showing this on the chart or anything, but I'm just going to speak to it. Even ETFs have a cost basis of nearly $70,000 to $80,000. And the average cost basis, which is the realized cap, is around $54,000. So compare that to everything below $50,000, which represents most active investors, as well as long-term holders, which currently sits at around $36.7 thousand. And you can see that during bear markets, the long-term holders, we basically never go below the long-term holder cost basis. Mostly during the bull market, and obviously in the bear market, we can sort of dip below it, but very rarely, right? Just because of the amount of cost basis that they have is so much relatively lower than everyone else in the market. So the short-term holder cost basis, this tells us we have a massive concentration of recent buyers at these high prices. So when we're looking at short-term holders, everyone specifically buying this year, last year, and everyone trading, day trading, right? So when we see short-term holders significantly in profit, when the price to the short-term holder is above the short-term holder cost basis by a significant amount, we're seeing short-term holders start to get pretty confident. We start seeing leveraging, aggressive buying, and higher funding rates. On average, these are also the people who will sell or panic sell when things go wrong. So if Bitcoin were to drop below or back under around 110, 105K, you'll start to see a lot of these recent buyers break even or start to go underwater. That's typically when this selling pressure intensifies during bear markets. So the current setup is suggesting that we're in this sort of sweet spot, right? So with upwards momentum is pretty much positive right now, since the short-term holder cost basis bounced above, or the price bounced off of the short-term holder cost basis. And so when you look at these two charts together, the MVRV and the short-term holder cost basis, the MVRV is starting to show another increase in unrealized profits across the entire system, right? So the short-term holder cost basis is also showing that recent buyers are feeling pretty good about their position. So everyone's making money. Recent buyers are starting to feel vindicated. But this is also when risk starts to accumulate in the market. Markets aren't going to go up forever, especially Bitcoin, right? So when corrections do happen in this environment, they can be pretty swift and severe because so many people are positioned the same way. Around 80% of the market is positioned in this way right now. So what does that mean practically, right? The first thing I want people to understand is euphoria phases are where most of the gains do happen in bull markets. And fighting this trend early, this momentum early, it's usually a mistake. So when the MVRV first reached above the standard deviation, we can see that Bitcoin was at like around 35K then. It did go up more to 57K. It had a pullback and then it reached 69K. It's also where most of the risk starts to build up. Like when you see us getting above this level, right? So secondly, these charts, they're not suggesting we're at an immediate top, but we're in that sort of territory where position sizing, risk management starts to become critical. The MVRV reading suggests that some profit taking is pretty likely when we move higher, if we move higher. And the short-term holder data suggests that any significant dip could trigger more selling than people even expect, right? So I'm using these charts as a guide to my approach. This doesn't mean sell everything right now. I'm not saying that. It means be aware of where you are in the cycle and adjust accordingly. As long as short-term holders remain comfortably in profit and MVRV stays elevated but not at extreme ratios, the path of least resistance is probably higher. Especially looking at other metrics on the website like momentum-based indicators, a majority of these long-term momentum trends are still positive, right? So I'm watching for signs that this dynamic could be changing. If we start to see spikes in the MVRV ratio that go pretty high, it can suggest that things start to get overextended. And one last note, the beauty of on-chain data is that it gives you this objective measure, a different view on market psychology. Instead of just guessing how people are feeling on Twitter or YouTube sentiment, you can see how people are positioned directly on chain. And that's not to say it's perfect, right? No indicator is perfect. On chain is not perfect. But these metrics will evolve as the market moves, and you should watch them accordingly, in my opinion. So both of these charts are available on chartinspect.com if you want to track them yourself. All the charts, MVRV, short-term holder cost basis, long-term holder cost basis, some of the other really important on-chain price levels are available as well. And these are all updated daily, and I give you the exact calculations that I use in these charts so you can verify everything I'm doing in the chart specific comments here. So you can see everything I'm doing here, right? So if you're interested in learning more, I invite you guys to look at the charts and go to the website and look at yourself, verify, don't trust me, right? So let me know your thoughts in the comments, and I'll see you in the next video. Thanks for watching. Bye.